Yeah. Yeah. Do not do that. So we've been lucky. We found that out the hard way with the first tenant that we ever placed. We To make a long story short, there were red flags on the front side. We ended up getting lucky 4 months in. We were able to move on. They were able to move out. We had limited damage, excess cleaning to do. But I think since then, like, that's one of the core things that we do.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Paul Novak, is an investor in Sheboygan Falls, Wisconsin. He's very active in the Bigger Pockets community. You can find him in the Bigger Pockets forums. Paul, thanks for taking the time today.
Yeah, I'm excited to be on the show.
When we talk about single family investing, I think I've spoken with investors really throughout so much of the country, but I was mentioning to you before hopping on here, Wisconsin, I know very little about. Shame on me. Is there a big investor community out there where you're at?
Yeah, I kind of got lucky. Uh, Very good for investing in residential real estate. We've got a big manufacturing presence here in Sheboygan. So one of the things, I was lucky that I was born and raised here, right? So it helps when you've got a good market right in your backyard. But with all the manufacturing, and we've got a lot of just private industry as well, right? So private ownership, people that have grown up in the areas, businesses that have been around for a lot of years. So it makes the job market really strong. Probably the biggest employer that we have in the area is Kohler Company, which is a huge company. So all of that helps keep jobs and wage growth growing in this area, which really helps support the rental market.
Now, when we talk about, you mentioned, was it manufacturing that came in? Was manufacturing, big manufacturing?
Yeah.
When we talk about that type of influence on rentals, on, investment in the area, this can be like the driver for real estate in a market like that. Are you and do people out there, are they constantly tracking, like, hey, what's the conditions of manufacturing out here? Because, like, hey, if that goes, or if they go somewhere else, then this is going to completely change the demographic of where we're at.
Yeah, good question. So I do kind of keep a pulse on the job market, and I think it also comes with what I do in my W-2 job. But I mean, we continue to expand, and one of the big things that's actually come to Sheboygan, it just got announced, is we're getting like an Amazon distribution center here.
Oh, wow.
So that'll be, again, more jobs, more influx into the area. So what I like is, like I said too, about all the private industry, right? We've got companies that they grew up in this area. This is where they want to stay. Family owned, privately held businesses. So I think, I even look for the company that I work at. We're not always, being a publicly traded company where you've got to chase profits, maybe a little bit more short term thinking to try and keep shareholders happy. We can take kind of more long term strategic approaches, which I think just makes that job market less volatile and a little bit more safe.
Now, when we talk about acquisitions, and we were talking before the show, you've bought some duplexes, you're involved in single family. there's so many ways for folks to get into single family home investing. But when you're in maybe a smaller market, like where you're at, is there one preferred strategy that you have, whether it's off market, on market, foreclosures, your sphere of influence? What's your primary acquisition strategy?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, so for us, our strategy's been relatively boring, right? I don't have a bunch of sexy strategies for how we've got in or got a ton of off-market deals. I will say our first two properties came off market, not necessarily that we were looking that way, but it just worked out that way. What I think is really important is to understand kind of who you are, what your strengths are, and then play to those strengths. So, what works for us might not work for somebody else. I've got other friends that we've kind of made in the area that are doing things completely different than what we're doing, still going after single family properties and being really successful. I think my wife and I are lucky to have a really high savings rate, have fairly solid careers that we've grown and a decent amount of money. So we've been able to kind of go into some of these properties as a long-term play and putting down, 25, 30, 35, 40% into these properties, especially as the interest rates have gone up, just to make sure that we still have cash flow left in the business to kind of protect us long term. Now, if
Yeah,
you're
yeah.
somebody that's just starting out, right, you don't have that type of capital to put down. You might have to go after maybe properties that aren't in as good of shape or, try to find different deals to be able to get into the market. And I don't think one way is right over the other. I think it's just really important to understand kind of who you are and what you can bring to the table.
Now, when you're making these acquisitions and you're purchasing these properties, how much of a factor is appreciation playing out there? Because I'm a Texas licensed realtor, so there's some areas which seem to be very much speculative, like for instance Austin, Texas. But then you have areas of the country where it's slow growth, but that's maybe the preferred way because you're not dealing with so much volatility. I've heard like the Carolinas are great for that. How much does appreciation come into play when you're looking at underwriting deals?
Yeah, I think that it's probably the biggest play for where we're at right now. So I think going into it, right, we didn't know what we didn't know. We were just trying to find a property. And, I think we got lucky kind of in our first two properties. When we got our third property and coming into this, it was all about cash flow. Like that's what we were looking for. I think as you mature as an investor, you kind of understand what's important and having a little bit of a balance of both is key. But I think, our third property that we bought, really good property, not in the best location. So the appreciation isn't as high there. And we've ran into some issues just from an investing standpoint that, if anything goes wrong with a property, while it stinks to shell out the cash, I can fix it. I'm in control. When you start running into issues with the neighbors or the neighborhood, there's only so much you can do. So, I think since kind of learning from that, where that property hasn't appreciated as much, we've kind of pivoted to buying nicer properties in nicer areas that, yeah, our cash flow might be tighter, but I think long term we're going to be better off and we get more stable tenants than in those areas.
Now, there's a lot of I would say interest in fix and flip and in short term rentals, but from my money's worth, year to year annual leases are really going to be your bread and butter if you're trying to build a stable, secure portfolio. And here's why. Fix and flip over the past couple years has been very challenging in the market that I'm active in Texas. You're competing with new builds that can be, $240,000, the bottom line on a HUD, and you can't then flip a home for 240 or 230 if you're competing with a brand new. And then in the short term space, you could have legislation that can change, but then also too you're kind of at the whim of your hosting platforms, unless you build your own book of business and sphere outside of that. What's your perspective on folks who may be like getting in and trying to determine, hey, do I go fix and flip? Do I go short term? Do I go long term? Low and slow, not boring, but something like that on the annual leases.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, again, and you're probably going to hear me use this term a lot, but I think it depends on where you are and what resources you have available to you. So we did buy our third, so I said that wrong before. It was our fourth property that we had issues with. Our third property that we bought, we didn't flip it, but we flipped it and rented it. We didn't flip it and sell it. And I remember, like, when I go in, I tend to go all in. We closed on this house like June 6th. Living in Wisconsin, summers are pretty precious. And I spent that entire summer, like 8 hours a day after work, 12 to 16-hour days on the weekends, just getting that property ready to be rented out. I think we got done with it like late August. And my wife said, yeah, our kids are young. We're not doing this again. Right. So, like, we did it, we got it rented out. Hey, we got a good return on it. The appreciation's been really good. But just knowing our situation, two full-time careers with now 9 and 13-year-old, we don't have that time, or at least we're not prioritizing to stick all that time into renovating a property. So for us, because capital is our strong suit, we can buy properties that are more move-in ready, knowing the cash flow won't be as good, the appreciation won't be as good, but kind of like you said, we've got stability. I think we've only turned over maybe 2 sets of tenants since doing this. Most of our tenants have stayed in the properties for multiple years. That
Wow.
works for us, right? If I was younger and we didn't have the kids, I'd definitely be looking at finding the worst house on the best block in a B-class neighborhood. And just because of my background, I can do the electrical, I can do the plumbing. I would definitely look to take those gambles. I think it depends on where you are in life and how much capital you have. So I think, I don't necessarily think it's going to be a one strategy fits all. If you've got more time, definitely by all means leverage that. You're going to make more money in the long run by doing these flips. But I think, if you don't have that, there's nothing wrong with saying, hey, I need to spend a little more on the property, put more down, and then, have a successful business doing that. You might not see these great returns, but don't let that be a mindset limiter to say, well, because I can't do what all these strategies are saying online, I guess I can't get in. No, there's just different ways to get in, I think.
Now, when we talk about what suits the area and the person, I hear this a lot, but I think it gets understated, which is you've got to fit you got to find what works for you. I've heard from a relatively successful Airbnb host who was a guest of this show, multiple properties, not just in one area but in several, and these were coastal locations. And what struck me was the ability to be a like host has to be something that you are comfortable with if you're doing Airbnb. Now, yeah, you could hire out property management and maybe they do a great job of that, but if you're going to be self-managing, you've got to enjoy really being a host. And if you're going to be, doing fixing and flipping, you've got to enjoy, managing crews. Because if that seems like a headache, and if it's just a numbers play for you, and you're like, okay, look in this, what's going to be the highest bottom line number, you might end up giving yourself a headache and maybe even another job that you don't like.
Yeah, I don't know. I definitely agree with that. I think for us, I mean, capital is one of our strengths. I think the other strength is, I've had a career working in, leadership in corporate America, dealing with people, dealing with tough conversations, hiring and firing, managing KPIs, building work instructions and systems and processes. And I think the numbers, I mean, I can't understate that, right? That is a big part of what you do with rentals, but another huge part is like relationship management with people,
Yeah.
right? Like if you don't want to have tough conversations, or if you're not willing to go in and, I think long term rentals, you have the exact same thing you're talking about on the Airbnb side. The Airbnb side just never goes away, right? Every week you're getting a new set of tenants and a new, person that you've got to give a good experience to. Where I think with the long term rentals,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I might be interacting with the tenants once every couple of months, but you still got to make sure you have a good experience. But I think if you do that right, you can set yourself up from a lot of other people to give yourself a competitive advantage, which helps with your rents.
Now, when we talk about tenants, you have a good track record. You mentioned, tenants have been there for years. This gets understated as well, because if you pick the wrong tenant right off the bat, that's going to put you in kind of a precarious spot. And this is now more important than ever, because tenants now have so many options. There's more. I can't speak for Wisconsin, but in so many places, in Texas specifically, there's more multifamily housing than like ever. And then also too, you have homes that have been sitting, single family homes on the market. So the sellers are now renting them out. So people are having to make like concessions to renters. Hey, we'll give you the first month free. Hey, we'll give you the first month free plus a, $200 Amazon gift card or something like this. And so when there's all this happening, and when tenants maybe have the leg up in this scenario, people might just say, "Hey, we'll take someone who's got the ability to pay us." But then what happens when they don't, right?
Yeah, yeah, do not do that. So we've been lucky. We found that out the hard way with the first tenant that we ever placed. We To make a long story short, there were red flags on the front side. We ended up getting lucky. 4 months in, we were able to move on. They were able to move out. We had limited damage, excess cleaning to do. But I think since then, like, that's one of the core things that we do. And it's more my wife than anybody, but she's got a very rigorous policy and process for how we vet tenants. And I think then to the other point that you made too, how you treat people is important, right? So we try to look at, ways that traditional rentals are set up, and then what could we do maybe a little bit differently to set ourselves apart. So, even right out of the gates, we do not do year leases. We only do month to month right from the beginning. And we tell our tenants, hey, if you find out this place isn't a good fit, like, you're not locked in and boxed into staying here, because we don't want somebody to stay that doesn't want to be here. And on the flip side, we're not just looking for a tenant, we're looking for a partner that's going to take care of the property the way we would. If you're not a good fit for us, we're moving on. But we do lock in our rent prices for a minimum of 2 years. So we say, as a sign of good faith, we don't want people to leave, right? We want to give people security. This is what the rent will be for a minimum of 2 years. So it's little things that we do differently. We do similar to what you said, right? We do gift cards at the holidays, right? As like a thank you gift to the tenants. We do welcome baskets for new tenants. We do, if something breaks, especially if a tenant's been with us for more than a year, I've done now with multiple tenants, I'll say, hey, the fridge broke. Go to the store and pick out the fridge that you want, right? Instead of me trying to find, hey, one on Craigslist that fell off the back of a truck and it's all dented, but it works, right? Like, it's those little things of making people feel valued and like the property is also partially theirs and they've got a part in it that allows people to stay. And I think, people that have done this for a while know how painful vacancy and having bad tenants can be. So what if I spend an extra couple $100s on an appliance, but then I get somebody to stay for, 3-4 years? That's well worth it versus, what the alternative could be if I try and nickel and dime every
Yeah.
repair, not take care of stuff.
I mean, look, if you have bad tenants, that'll make you a tired landlord faster than anything else. And that's,
Yeah.
of course, a huge acquisition strategy for people is just looking for tired landlords. And hey, they didn't have the money to rehab the property because the tenant did, over $10,000 worth of damage with cats, dogs, whatever, what have you. Just the interior of the home can get destroyed, right? I mean, so much, right? A bad tenant can really just drive value down. We are coming up on time here, though, Paul. Any new projects that you're working on, or anything you want to get out to our audience here today?
Yeah, I think this isn't exciting, but this is something that I'm mentally working through. We've built ourselves up to a spot where if we paid off our entire portfolio, we'd be good. We could retire. We'd have enough cash flow. And I can't begin to describe, I think for people that are out there that are investors will understand it. My wife definitely does not, but I'm trying to peel back and start taking debt off the table. And we've been working, we borrowed from HELOCs or 401k loans or things for down payments on these properties. And we're getting to a spot where we're back to zero, and it's not as thrilling to pay off debt as what it is to go out and get the next deal and acquire the next property. So for me, I guess, which, like I said, isn't exciting, but it's crazy how difficult it's been for me to kind of throttle back all that energy and channel it towards kind of taking some debt off the table. And I don't think that I'm done investing forever, right? We'll be out and we'll be getting different properties in the future, but just at least with the state of where things are right now, that's kind of the moves that we're making short term.
Well, congratulations on that. I mean, owning property debt free is a huge accomplishment, right? Because that's typically real estate investors are probably the most pro debt people that you'll find to talk about good debt, right? So finding someone who's like, hey, you know what? I've got a bunch of real estate and no debt. That's a huge accomplishment. But Paul, thank you so much for taking the time today. Thanks for coming on the show.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.